Bitcoin just closed its fourth weekly red candle in a row, something that's only happened 2 times in the last basically 3 years. Actually, much more bearish at this point than probably people have expected or realized. But we've never seen 5 weekly red candles in a row, ever. Not even going back on the Bitstamp chart to 2014. So what does that mean? Markets are under pressure. Is Bitcoin going to go down with them if they go down? Or are we about to see at least a relief rally? I've got legend Jon Najarian with me today to discuss this and a hell of a lot more. Let's go.
Let's go.
What is up, everybody? I'm Scott Melker, also known as the Wolf of Wall Street. Before we get started, please subscribe to the channel and drop the people's elbow on that like button right down below, like the Rock of old. Guys, I haven't been here for a live stream. I was off all of last week. It's been a long time. I shouldn't have left you without a strong stream to step to. The words of Eric B. And Rakim, not mine. But yeah, guys, I'm glad to be back discussing everything going on with the markets. And it was kind of a weird week. Bitcoin went way up, had this kind of crazy rally, and then saw the classic Sunday blood coming into Monday as the stock market opened. But guys, before we get started, I'm going to bring on my guest in 1 second. But of course, I have to tell you about, I can never get the mirroring right, our sponsor Vauld right down there on the bottom. I know that a ton of you have signed up. I've gotten some great feedback. I've been using it. Of course, they have the highest yields in the game, 12.68% on stablecoins, 6.7% on Bitcoin and Ethereum. And my favorite feature there, which has been working overtime for me, to be quite honest, they have the automatic buy the dip feature, which takes your human stupidity out of buying the dip. Because we know that every time the dip comes, you're like, I'm going to buy it, I'm going to buy it. And then you're like, nah, it's going to 28 grand, man, I'll just buy there. We know how you people are. So this automatically takes all the guesswork out of it. But I want to bring on our guest right now, Jon Najarian. Last time I was like a weird robot. So hopefully our tech is working this time, man. How are you?
You weren't a weird robot, but nonetheless, you were interesting as always, Scott. And I'm sorry I missed you at BTC Miami.
Yeah, we were just talking. We're going to run it back at Consensus. We'll catch up in Austin, Texas, since we missed it in Miami. So listen, man, futures are sliding. Actually, probably the market's open. I haven't even checked. But there was a lot of pressure coming in. Commodities sliding. Gold down 1%. Seemingly nothing outside of the dollar, which is a little scary, is performing particularly well. What's your thoughts in general, macro, Bitcoin aside right now?
Yeah, macro, I'd say, Scott, it's really an issue of people just getting liquidity wherever they can get it. It's not an all-out panic yet, and hopefully it won't be. But it's certainly, Friday, that move from 20 on Thursday in the VIX to almost 30, and then through 30 today. Today's move is not nearly as big, of course, as that move Friday. I mean, that's a 60 some odd % move. When you look at I was on with Brian Sullivan earlier this morning too, Scott, way too early at 5:50 Eastern time. Please. And at least I'm in the Eastern time zone now, so that's a little easier. Yeah. But Brian pointed out that 5.2 million, I think, puts traded in the SPY on Friday. And he said, that's a lot, isn't it, John? And I said, yeah, it's about, I thought 45%. My math was bad. When I went back and looked at the 5-day average, it's about 65% above average. Just looking at a 5-day versus Friday. So for instance, 5.2 Friday, normal is a 3.2. So, I mean, that's a tremendous jump in fear. And that is what you'd expect to see if you're going to get people moving to the sidelines, holding on to some positions, because a lot of those puts that were bought, Scott, were out of the money puts.
Right.
And if you really want to protect yourself, that out of the money put, can make you some money on a big move like that. But it's not going to help a big portfolio of, because you want something at the money. if you're really protecting. If you just want to hold and you want to give yourself a little bit of comfort, you buy an out of the money put. And that's what they were doing on Friday in spades. I would continue to say, take a look at the VIX on the CBOE's futures page, because they make it really easy now. They're all the way out as far as the VIX futures go. And right now we're in a contango situation where the spot is higher than those futures. The spot was over 30 just a little bit ago, and the futures were like out to July were like 28. So that's telling me that we might be reaching a little bit of a burnout as far as short term anyway. But to your point about why is crypto down? Why is oil down? Oil should not be down. Crude and gas should be jacking up, but people have a lot of profits there. So I think they're pulling them off the table, Scott.
Profit taking.
Yep. And they're raising money where they can. And, you know, that's the way hedge funds always do it. Big traders always, you know, you sell when you can, not when you have to. So you pull a little of that off so that you can basically commit more capital if and when you think that we've reached a pivot point in the market. And, you know, Bitcoin has been dancing around that Fibonacci number. What is that, 39.7 or wherever that is? It broke through, and now it's trying to get back up over 31.2, or 39.2 rather, and we'll see whether or not it does, and if that holds, and then it makes an attempt at those Fibonacci numbers.
Yeah, I'm pretty, I mean, I always am generally macro, but actually, I mean, this, like you said, I mean, VIX going crazy, people panicking and buying puts. This is, I mean, Twitter sentiment, fear and greed, all those things seemingly as bearish as I can really remember. Usually a good time for a bounce, to be quite frank, right? Whether we're continuing down or not, 4 red weeks for Bitcoin in a row is a lot, right? Yep. So you gotta think that maybe we get at least a relief rally here. Things are oversold. There's all kinds of like bullish divergences, which I'll discuss later. But like, it seems like, as you said, like now we're in this sort of peak fear moment. That's usually by the blood, right?
Yeah, exactly. I mean, and again, those VIX futures, I'm looking at them right now. If you look out in July, it looks like about 20, looks like right now, the last for the July futures contract is 28.77. And we were just over 30 a little bit ago. We've traded down to 29.24 in the front, the spot VIX. So I would think that, again, they have not come for those out of the money futures at all. And so the fact that they're stable at that 28-ish level and that the spot VIX is moving up and down like this, when it got over 30 this morning, the high was 30.05 for the spot VIX. None of the futures got over 29 at all. Right. So, and that's going from, you know, the May futures all the way out to next year's futures, not moving like that. So to me, Scott, that says that that burnout is coming. I just can't tell you when. But I'm not talking about weeks. I'm talking about, you know, hours probably. That we see some sort of a burnout for the people that, you know, held it over the weekend, wanted to come in short today, or were worried today and selling on the opening and now that's kind of fading a little bit. And then we'll see, because we got a bunch of really big earnings this week that could help turn that around. Yeah.
I don't know if you saw this. You might not even be able to see it here, but this is obviously mortgage rates, the highest jump year over year in history since they've ever recorded them. And then you pop over to the St. Louis Fed and you can see that home sales are absolutely falling off a cliff from January to March. Do you think that this has canary in the coal mine sort of potential? I mean, listen, I myself and many others have been saying real estate seems overheated. It's in a bubble as it continues to go up another like 35% a year, right? So, I mean, maybe it just continues to do that. But doesn't this feel like things in general, I mean, less money obviously coming in, less liquidity coming into the system, interest rates, mortgage interest rates between 5 and 6%. By the way, that's not even high. It's a big jump, but it's not high relative to history.
Yep. You and I, even though you're a lot younger than me, we've both probably have had mortgages that were higher than where they are now.
I remember my parents having a mortgage that was 15% when I was a kid.
Yeah. Yep. Well, I think right now it's basically Jerome Powell making the second really big mistake that he's made. Obviously, we stayed too long on the easy money policy. And, that part is easy, but I think you and I were both saying it at the time that word transitory just didn't make any sense. And, for all the people that want to say, including the president, that this is just Putin's inflation, there's no way. I mean, Putin's inflation is real, but that's the last jump of inflation. I mean, we were saying that it wasn't transitory, before Biden came into office, when Trump was still in office. So it's not just me bashing the president. It's me saying it wasn't transitory. You can't just throw trillions of dollars at the market and not have some reaction. And now they've got the reaction. They stayed with it way too long. And then the Congress continued to say, oh, let's just pump another 1.9 trillion at it, even after it was done. They said, let's throw another 2 trillion at it because, the voters deserve it or whatever. And then let's do 5.8 trillion and build back better, which thank God they didn't do. I mean, in the future, they might actually be building statues to Joe Manchin for putting his foot down and saying no mas.
Yeah, he was actually right.
Those are the issues. And now the second mistake that the Fed's making that luckily Congress can't make, the mistake the Fed will be making now is if they indeed hit us with multiple half-point interest rate jumps, I think one is enough, quite frankly. I think 1 half-point jump gets us to where we need to be because the bond market has done most of the work for them. And you're not going to stop people from buying food. They'll downgrade, just like a lot of people have said. I'm not buying as much steak. Yeah. For instance, they might say, because prices shot to $35 a pound for ribeyes or whatever. But so they'll downgrade to chicken and to ground beef, that's 80%, lean and 20% fat and all that kind of stuff.
They're still going to eat.
Yeah.
It's going to be like the movie Vacation where you just eat the hamburger helper without the hamburger, right?
Yeah. I mean, you're going to still eat. You're going to still drive around in your car and all that. And the Fed jacking up interest rates and screwing over the biggest employer in the United States, which isn't Walmart, it's the housing industry. When they basically crush the housing industry, which your chart very accurately shows from, the St. Louis Fed, that's going to drive us into a recession. So what I'm hoping, Scott, is after that first 50 basis point move, the Fed backs off on the rhetoric and does perhaps another 25 basis points and does a little, wait and see. If they just do 3 in a row like that, 50 basis point jumps, they will push us into recession. Yeah. I'm not the first to say it, but I'll absolutely pound the table. We're going into recession if they do that.
Right. There's a couple of reasons I think that what you're saying makes a ton of sense. A is now we've priced in the worst case scenario. Mm-hmm. So if we're pricing in a half a point, 7, 8, 9, whatever, however many times, anything lower than that the market's gonna react well. So they've set it up to any news is good news, right? Half a point, half a quarter basis point looks good, and also it's an election year. If they push 0.5 or half a basis point at every single meeting, we're gonna go into recession. Everybody's gonna lose their job. Politicians don't do things that make them lose their job.
Yeah, and they hate to play God with the voters because, it's going to be rough enough for the Democratic Party this time around. Am I cheering it? Yeah. I'm not so much cheering it, Scott. I saw it coming because of all that, again, acerbating the bad policy of the Fed by throwing more money at it. That's one of the things I'm upset about. But other than that, there's nothing being done right now that's going to cause prices to come down again. And various people keep saying, well, inflation may have peaked. The only inflation that may have peaked is the inflation that they measure. The two biggest inputs food and energy, yeah, they measure them, but they say, well, if you strip out food and energy, inflation was only up this much.
Right.
But food and energy aren't going to stop going up. They're going to keep going up, Scott. That's my fear. And there's nothing that the Fed can do other than, really driving hard into a recession. And if a recession is the cure for the market, I think the medicine is worse than the disease.
Yeah, that makes a ton of sense. I mean, all of that said, do you think that, since everyone obviously wants to know, do you think that Bitcoin can sort of decouple and do its own thing regardless of any of this?
I think it can. But again, I think a lot of what goes on in digital assets in general there are really big whales. There are more and more institutions that have figured out how the wallets work, who's the smart money, who's not the smart money. Our dollar, or not dollars, our Bitcoins coming out of wallets or going in, or for that matter, Ethereum, Solana, Luna, and all those. Are we seeing these wallets open up and basically assets coming out, or are they tumbling back in? And I think a lot of people really get carved up, Scott, being newbies in this space, and that a lot of the lack of discipline on taking profits. You had a nice opportunity just a couple of weeks ago to buy it in the high 30s and then sell it
48.
over 45.
Yeah.
I'm talking Bitcoin, of course,
yeah.
But for those who traded it, they did well. For those that just bought it and paid 42, and then it's going to go to 60, so they're buying more at 45. I don't know why you need to own so much, as much as you need to do a little trading and get used to how that feels, pulling money off the table and then cutting losses and moving on. This asset class is different, but trading isn't different.
Right. It's a dream for traders. I mean, it's the best asset class there is for traders, and you just keep your investment stack and don't pay attention to it. But interestingly though, we're basically at 40,000 for the last year, up, down, all around, whatever the stock market does. It's actually been pretty stable at all of this.
Yeah. And for a new class, to be this, as you said, stable. I was just looking at the Bitcoin volatility, which you can track if you go to buybitcoinworldwide.com. I have no relation with the site.
No, just a good tool.
Yep, it's a good
I love
tool.
how we have to specify when we have no relationship with everyone in this world. Yeah. Not allowed to like anything.
Yep. I try to disclose when I own something or when I don't.
Yeah.
Or if I've got a vested interest, because people do pay me to promote things. And even then, I will say, because I'm not going to say I'm that influencer, and I'm not trying to move stock price.
Yeah.
But they might say, hey, I'd like if you could help us make our company a little higher on the mind.
Yeah, it's called marketing. It's fine.
Yep. And so I will try to do that. But in this case, that Bitcoin volatility index, 30-day estimate, it's 2.42%. Now, granted, 2% is 32, and 3% would be 48, because we're talking multiples of 16 here. But so you're talking a volatility versus the S&P that just hit 30 today. You're talking a volatility of 40 for Bitcoin against the entire S&P that was 30 this morning. So this is really low volatility. So you guys should really pay attention to what Scott's saying as far as stable. In some people's minds, they're saying, oh, this isn't stable at all. It was 69 and now it's here. Well, it's basically been moving down towards the S&P level of volatility rather than becoming more whippy.
Yeah. In a world where Facebook can drop 30% in 10 minutes and Netflix can drop 25% in 5 minutes, the volatility criticism of Bitcoin has become nonsense. I know you need to go, but it's just nonsense at this point. Yeah. When you see what can happen with stocks that have a higher market cap than the crypto market, some of them,
Yeah. Well, individual names have a higher market cap than the entire crypto market. Obviously, Apple and Microsoft stand out, but Friday or Wednesday last week, Scott, we had that big drop in Netflix. And so you talked about 30% moves, and that was one of them. That was a big 30% move. I bought it at 219. Am I happy today at 212? Not especially, but I try to take advantage of big drops like that.
Same.
And then sell big fat options against it. You don't just need to stake. People, when we talk about this in the crypto terms, people will talk about staking. Some people will even talk about writing options against their Bitcoin and so forth. But both of those are kind of similar to what traders have been doing for years, as far as you never know it's the bottom, but you try to buy it, like I say, after two really miserable trading sessions, Thursday and Friday. Netflix is 212. It's basically right back down to those lows that it put in last week. But not a lot lower than where I just bought in. So I'm not getting shaken out in trades like that. I get shaken out if I'm trying to ride momentum and I stay too long at the party and then they pull the rug out from under me. Which
I hate Facebook, but I bought some when it at the like 200 MA when it dumped. I mean, I'm still down, but like you said, I mean, if something goes down 35%, I have to imagine that sometime in the future it's going to trade higher again, right? We're going to kind of fill that gap. Whatever.
Yep. If they didn't lose their way completely, that's exactly what's going to happen. And I think in the case of Netflix, their next challenge will be hiring enough of those salesmen because they will be able to do ad supported. I think that's a fact. But, they need to do a very quick job of switching gears. And that doesn't happen in the blink of an eye, even in tech land, because they can't hire enough people. You can't have bots.
Nobody wants a job. Anyway.
Yeah, you can't hire bots to be that salesperson for Pepsi or Cadillac or whatever. These are skills that people have, and they know which firms to call on to get those things sold. And eventually that will happen. But again, that's probably the next thing that they're going to have to tell us. Hopefully when the stock's more like 240, 260, they're going to say, well, we've been putting on a lot of advertising salespeople, but we need to hire a lot more. We need to get a lot more.
Absolutely. Well, Jon, man, thank you so much for your insight. As always, always glad to be able to capture 20 minutes of your time. It's an honor. Everybody follow him, Jon Najarian, right? JONNAJARIAN on Twitter. Is that correct? Yeah.
That's correct. Thank you so much, Scott.
Thanks, man.
Keep
See you
up
soon.
the great work.
Thank you. Just me, guys. Back. Go follow Jon Najarian right now. Legend, Chicago Bears legend, trading legend, all over your TVs and now your YouTube screens here with me. But yeah, guys, sort of as we were talking about here, I mean, Bitcoin falls to 6-week low amid risk-off sentiment. This has been a pretty significant move down. To me, it hasn't really felt like it. Maybe it's because I have not been tracking the markets. I was off all of last week, but I was sort of shocked to go and look at the chart, which we'll do right now. I mean, taking a look at the weekly right here, you can see 1, 2, 3, 4. This one barely, and now a fifth potentially, but 4 red, in my case, blue candles in a row. Not something we see often. Let's go back. I told you last week 3 was rare, right? We got 3 here, but let's go look and find the other times that we've seen 4. Here, the sideways chop in 2020. This is after the crash in May, right? And when we kind of recovered back to that 10, but this was basically from 10,000 to 8,800. No volatility, just a choppy range with sort of like half-assed red candles. Then you got to go back all the way to October and November of 2019 to see 4 of these candles in a row. And I could not find a single time on the chart going back to 2014 where we had 5. Hasn't happened. So just to give you some context, like this is a major sell-off coming back from 48 all the way down now to this key sort of support area right here. I think that means we're likely going to bounce. You would think that this is a bearish candle right here. Let's zoom in a little bit. People love to see that upper wick and think it's a bearish candle, but when it happens at the bottom and you see a long upper wick like that, it's actually considered a bullish candle if you see bullishness on the next one. Some people call it an inverted hammer. This wouldn't necessarily be it. Long-legged doji, inverted long-legged doji. But regardless of what name you want to give it, when you see that, you can see bears, even though bulls failed, bears were not able to advance it further. So if we do see, it did close below 39.6, which you don't love. That was support. So we want to see this week back above 39.6, basically. But here we are right down in this demand area right here. We still have higher lows right now. I mean, we can move this over here. Anything higher than, I don't know, this area around 37,205, we're still making higher lows, but we are potentially breaking down this range, right? We have this little range between 39,218 and 41,557. We broke above, but as I said, those 3 wicks above, tons of liquidity there for shorters and unable to close above. Well, now maybe we can get the same thing on the bottom. A few wicks on the bottom, potentially move up. If it closes below the daily today, 39,218, you got to start thinking that there might be more downside here. But as the Bollinger Bands are curling up and have tapped the bottom, that's usually a decent signal that we're going to get a little bounce. And then, of course, I talked about this in the newsletter, the free newsletter, which you guys should be signed up for. Jeff, there's no more pump song because I get a copyright claim every time I play it. Yeah. But as you can see, guys, we had bullish divergence, that big move up that got us all the way up to like 43. And now we're building potentially, not yet. We need to see basically higher than like 32.86. We need to see this clear elbow up on RSI, which we do not have here, but potentially more bullish divergence there in the 12 hour. 6 hour, same ones there, right? Potentially. 4 hour, massive from here to here over a longer period of time than you like, but it's starting to show that it could happen. And of course, on the daily, if we see a close of RSI above 35.31 right here, and this elbows up, we would have a massive bullish divergence on the daily. I'm not saying that these are going to happen. I'm saying it's worth watching because these are great bottoming signals when you look at everything else. Then, of course, you just have the dollar going absolutely nuts. Everyone wants to talk about hedging, store of value, dollar. People all over the world, when shit goes bad, as Jon Najarian was saying, they sell things in dollars. The dollar absolutely pumps like mad. Anyways, continuing on with the news. I'm sure you all heard about this. Twitter eyes deal with Musk as soon as Monday. That's today. Looks like Elon Musk is going to get his wish and buy Twitter. What do you guys think of that? Seriously, what do you guys think of Elon Musk owning Twitter? I will say that in general, regardless of who owns it, the most mentally peaceful times of my life are when I don't look at Twitter, frankly. I love not using Twitter. I think it's kind of become a cesspool, kind of a shithole, and a rough place to be if you have a large following. So like, I kind of like tweeting once or twice a day and then closing it and hoping for the best, but maybe that can be fixed with some new policies. Certainly the bots have ruined it. I just found a way today. Sven Henrik, Northman trader, DM'd me and said, do this. He said, when you tweet only your followers can reply. And then like 10 seconds later, switch it to everyone. And then the bots don't target you in the first 10 seconds. I did that twice today and that seemed to work. So maybe we can trick the bots for now, but now I know they're listening and they're going to just fuck me now that I just said that. Bots are listening. We know they're listening. Bots, man. Right? But yeah, so the bots have been terrible. The negativity is out of control, right? But maybe people will be reinvigorated by the idea of Twitter if Elon Musk comes in. But the question is, do you guys think that one man do you think he's going to really like change the censorship of Twitter? Do you think it's going to become a free speech marketplace? I don't know. What do you guys think? I like Twitter, but dumb online debates are stupid, right? And that's what it's basically just degenerated into. Anything would be an improvement over the current Twitter, right? But like, I get the vibe that like, I'm going to quit Twitter, which people are like saying, I'm shadow banned. There's no such thing as you're not shadow banned. Just nobody cares about crypto and is engaging with crypto. Let's be real. Everyone thinks they're shadow banned because their engagement's down. Maybe nobody's using Twitter or cares about crypto at the moment. I don't know. Right. Yeah, I just think that it's kind of become a rough place at the moment. Maybe that's just a matter of sentiment. I don't think it'll change very much. I do not. But hey, maybe I'm wrong. Grayscale renews push with SEC for Bitcoin spot ETF. Grayscale going hard trying to get their ETF approved. People are saying it could actually happen by July, but yeah, I don't know about all that. We'll see. But in a letter to the SEC, they said that the manner in which the last Bitcoin futures ETF by Teucrium that was just approved leaves the door open for a spot ETF. And they've gone as far as to say they will sue the SEC. Love to see it. If they are not approved. Matt's wife has shadow banned him. Yeah, everyone on Twitter is like, I've been shadow banned. My engagement is so low. Like, I have not been shadow banned, and my engagement's also low because, listen, I used to, like, it's not hard to see. You go and you're like, I was getting, like, in the bull run, it was like, I would get like 2,000 Twitter followers a day. Now it's like 200. Nobody gives a shit about crypto. Just check the Google searches about Bitcoin and stuff. Nobody's paying attention. It's fine. You're not shadow banned. Just there's no new people here. Yeah. You know, but yeah, Grayscale going as far as saying they might sue the SEC. It would be amazing to see a spot ETF. This would be a really meaningful liquidity event, you know, if everybody could buy a spot ETF. So we'll be cheering for that. In rough news, I don't know how many of you guys were following this, but you definitely know that I'm a huge fan of Aku and of Micah Johnson. I mean, I went to the guy's wedding. We're close friends. You know, I've known him for a couple years. And I've gone down the Aku rabbit hole, his NFT project. This is the only NFT project in the world that I've collected, right? I really believe in it. I believe in the ethos of it. I love the art. I've seen what they're doing. I mean, the investors are every celebrity you can name across the board. They're making Hollywood movies, all of this. All of that said, all of that can be stifled by a shitty smart contract. And sadly, that is what happened here. I don't know if you guys saw this, but they minted Akutars this weekend. Maybe it was Friday. It was on Friday. So basically, if you own the Aku, I own all the chapters. So from owning all of them, I got 6 mint passes. Those mint passes were selling up to 50 to 60 grand. Every one of those mint passes gives you an Akutar that would be minted by it. And then if you hold those, you also would get a half ETH discount on minting, and you can mint up to 3. So I minted my 3 also, right? And I was like, yeah, where are they? You know, and I kept checking, and there was something going on when I was trying to mint them. It was weird. The discounts were coming, and it was a reverse Dutch auction, meaning that as time went on, the price ended up going down. So everyone who bought at a higher price, when the auction closed and when the last one was sold, everyone would get a refund down to the lowest price. Really innovative, awesome way to do it. Talking about a lot of money being refunded. Okay, so what happened? Whether it was a hack or an error with the smart contract, you can go into it, you can look it up, go into the details if you want. But basically, the entire smart contract, 34, 40 million, depending on who you ask, got locked in the contract, and nobody can get the money out. Not the hacker, if there was one, not the team, nobody. Because of the way that the smart contract was set or what a hacker did, it completely locked it, effectively burning that ETH. Well, what does that mean? That meant that people either needed, that meant that for them to mint, they could still do it, right? You bought it, they're going to mint. Apparently that's happening, maybe happening right now. They're auditing the minting contract. But for all those refunds that needed to come out, there's no money there. And people are such idiots, a scam, a rug pull, all these things. The only people who got scammed and rugged are Micah and his team. This is the most fucked up, horrible situation ever. Basically, they would have made, minus what the refunds, you know, $34 million gross, we'll call it. Maybe it was going to be 25 net. Would have made $25 million, and it's locked away. And now they have to go into the treasury from all the chapters they sold before, the investment, all the money that they had, because Micah has only reinvested to make everyone whole and issue the refunds. So the $35 million is locked away. And now let's say they owe 5 or 10 million back to the people who got discounts or who paid more in the Dutch auction. They need to refund that out of pocket, right? So, you know, for anyone who thinks that it was a rug pull or a scam, all the nonsense you see online, the only people who got fucked are the team who now are going to do the right thing. They're paying everyone back and minting every single one of the NFTs. So I'm still extremely bullish on it, but man, it really makes you think. Like, Micah is a genius artist, incredible team, the best people in Hollywood. But if you hire the wrong developer and they have a fucked up smart contract, how are you ever supposed to know that as the businessman? Like, if I can't do an NFT, anything like this, because like, you need to know your competency. You need to trust someone else. Absolutely insane. They built this entire thing and all the money gone because of a line of code. Yeah. Jeff, you're doubting that it's locked away. It's literally locked away. Yeah. Literally locked away. So that money is completely gone. What a terrible story. But either way, still believe that these are going to be Bored Ape level, whatever. Yeah, it'll be a scam rug pull if there aren't refunds. No, all the first refunds went out. Now they're refunding the people who got a 0.5 discount. They're minting all of the NFTs, and there's no reason the NFTs won't still be worth an insane amount of money. I mean, like I said, minting passes were selling for $60,000. The only people who got fucked are them. You know for a fact they can't take the money out. You'll see if that smart contract somehow unlocks. That money is never coming out. It is gone. All of that work and potential profit. Moving on, Nissan and Toyota enter the metaverse with two different approaches. Well, I mean, if you're not in the metaverse, are you even a company at this point? Yeah, they're both coming in, doing digital events, virtual customer service offices. I mean, imagine going into metaverse to get your car fixed. Like, oh, man, you know, like my actual real car is outside and it won't start. Let me plug on my Oculus and go visit virtual customer service. If I even have an internet connection. Okay, everybody's coming into the metaverse. We get it. Every company will be here. Do I get it necessarily in every case? No, I don't. Yeah. Are you even metaversing, bro? Yeah, we are just so early. Yeah, it's true. But listen, we're so early, but it also makes you think. I'm just going back to the Aku thing. It really bothers me, man. I feel so bad. I feel so bad for them. Like I was willing to listen, I minted 3. That was $30,000 plus a discount of 1.5 ETH. I mean, there was a moment where I was like, I'm probably out like 35, 40 grand here. You know, I was fine with it. I don't know. I would give Micah my money right now to help support. But until this was all resolved, I was definitely like, well, I minted 3 of these things. I might be out a whole lot of money, But yeah, that's funny. Anyone getting Amway vibes from NFTs. When I was growing up, both of my neighbors on both sides were Amwayers. We were just getting chirped at about Amway 99% of our lives. Yeah. And here you go. A piece of research. Over 10% of Americans will own crypto by year end. That's a lot of people. About 34 million Americans, 340 million Americans, 10%, 34 million. Do the math, right? That's about 10% of the population. But if you do the math with the adult population, it's about 12.8% of the population. The researchers predicted that the number of U.S. adults who own and use crypto for payments will double by 2023 and added 3.6 million Americans would use digital assets as a payment method at some time this year. That is a lot of adoption. Here's the actual report right here. They got graphs and charts, so you know it's got to be right? If you got cool graphs and charts, then it has to be true. That's all I got for you guys today. Jon Najarian, what a legend, man. What a smart guy. I think the first time I had him on the podcast, I didn't really know him that well. I think that my first question was if I lined up at one end of a hallway, because he was a linebacker for the Bears. If I lined up at one end of a hallway and you lined up at another end of the hallway and we ran full speed at each other, how many times would I get past you? And how many times would my body spontaneously combust? I vote on spontaneously combust. The brilliance of the hack is that it's locked. Check your code. Yeah, I mean, the question is then, is it just something that they missed? Was the audit not done right? Was there no audit? I mean, there's a lot of question marks. But bottom line, like I said, Micah, he was a Major League Baseball player for the Dodgers who became this incredibly talented artist. That's his core competency. You have to have people that know what they're doing. He's not going to go audit his smart contract. He's going to trust someone. This crazy thing in place, man. It makes you, someone said before, we're so early, but it really is scary, man. It's really scary. It's really scary. And it sucks, right? Makes you definitely think you see all these sort of exploits and stuff. There's a lot of money. A lot of money. You're talking about generational wealth gone for him and his family in 5 minutes, but you see all these wormhole hacks and exploits, and it is pretty scary. Yeah, I mean, it's hard not to see why regulators would go, maybe there's a problem here and we need to oversee this. I get that. The more you look at it, the more you look at it, I get that. Anyways, guys, that is it for today. I'm about to go interview Tim Draper. Awesome. I don't know if you guys have been watching my new podcasts, but they've largely were recorded live, and I've seen really good feedback and traction on that. I absolutely have loved doing live conversations. I never want to do Zoom again, even though I have to. But we'll be recording another big round, likely at Consensus in June. But if you missed, I mean, we had Caitlin Long, Pierre Rochard, we've already put out, Max Kaiser. We talked about sunning your balls and how Bitcoin is balls. And he called Elizabeth Warren like a $2 crack whore who was like sucking in the parking lot. If you guys missed those, you need to definitely go check them out because they're pretty epic. And otherwise, I will be back tomorrow, guys. Vauld, right? See it? They allow you to invest without stress. But seriously, I use the platform. I never, ever accept a sponsor unless it's something that I can confidently say I believe in. And you should go down and check them out. Get a big discount, great rates, incredible platform. Sign up, show a little support, click on the link. It helps, makes me look good, you know, and I don't look that good. Let's be real. I see people over here talking about they thought I was, I took last week off. I was supposed to be on vacation anyways. I had to cancel that vacation because COVID. I was COVID positive come time for that vacation. So basically, I was like, I'm going to take the week off anyways because I've been away from my kids. I was in Miami. I've been quarantined basically. And I was like, I'm just going to spend some time with my family. And we ended up going to Miami on the back half of the week. Had an awesome time, focused on my kids, paid less attention to markets and Twitter. I got to tell you, man, I love working hard and recording content, but like obsessing over the market and checking Twitter and stuff when you could actually be spending time with your family, it's a scam. It's a hack. It's a trap. Don't do it. But yeah, so I decided to just take the week off and spend all of that time with my children, and it was awesome. So yeah, when are you going to get a trim? Tomorrow. I haven't been able to get a haircut because I'm doing COVIDs and stuff. Anyways, guys, that is all I got for you today. Peace out.
That's dope. That's dope.
Guys, I have a serious question for you. How much interest are you earning in your bank account? Is it 0.00001% or something similar? We all know by now that there's a better way in crypto, but you want to be using the best platform possible, and that is Vauld. I have been using it myself now for quite a while, earning the highest interest rates in the industry. 12.68% on stablecoins, 6.7% on ETH and Bitcoin, and earning yield on a ton of other assets. But it's so much more than that, guys. They have a robust exchange. You can swap your coins, and they have the amazing automatic investment plan where you can dollar cost average, or more importantly, buy the dip automatically. We know that when the dip actually comes, nobody buys it because they're scared. Well, you can automate that process now with Vauld. Guys, this platform is absolutely incredible. It does everything. They're backed by Pantera and Coinbase Ventures. You really can't ask for anything more. And if you use the link right down below, you get a 40% kickback on trading fees, 5% commission on interest payouts, and 5% commission on loan interest. Guys, sign up right now at thewolfofallstreets.info/Vauld. That's VAULD. Do it now, seriously.